Hi, my name is Nusantara. I'm here to brief about the introduction of journal paper. In this current condition, every people most likely will go to the convenience store to reach their essential item. Despite of from this issue, the idea of build the convenience store in Malaysia is a great idea to be implemented. In Malaysia, 7-Eleven is one of the well-known convenience store that operate 24 hours. From all the good feedback, we are conducting the study of 7-Eleven financial performance for year 2019 and 2020.
Assalamualaikum and hi to everyone. My name is Nabila and today I'm going to present for literature review part and also market value ratio part. For literature review, we focus on financial performance, company's improvement and also customer satisfaction. Under financial performance, this research is to find out the influence of market value ratios, profitability ratios, efficiency ratios and also liquidity ratios. The lower the debt ratio, the lower the source of financing through debt. Next, company's improvement. Despite the negative trend in the velocity of money, the money supply has increased to sustain the country's economic growth. Lastly, customer satisfaction. We believe that customer satisfaction comes from the result of consumers' buying experience and by using the product. Customer satisfaction in turn contributes to customer loyalty. That means satisfaction has a very strong influence on loyalty.
My name is Nusantara Project and I will talk about the research method. For this project, our group using qualitative data that use descriptive statistical calculation to compute the ratios of the financial performance to analyze the achievement of 7-Eleven. We have done through the annual report for 2 consecutive years to have the comparative amount between 2019 and 2020. The financial statement including the balance sheet and income statement are very important to abstract the information for making the analysis. To analyze the financial ratios, our group using source Ministerial Decree number Cap 100/MBU. The research design can be seen as in this slide.
Good day everyone, my name is Nafisa and I am from USM. I am presenting the liquidity ratios. There are 3 ratios that we compute, which is current ratio, quick ratio and cash ratio. This ratio is used to determine the company's ability to repay the short-term debt in this analysis. The current ratio of 7-Eleven in year 2019 is 0.55 and year 2020 is 0.63, which is less than 1. This means this company does not have enough liquid assets to cover its short-term liabilities. Next, the quick ratio of 2019 is 0.23 and in 2020 is 0.31. This shows that 7-Eleven cannot meet its current short-term debt obligation without selling its inventory, because the quick ratio is well below than 1. Then for the cash ratio, it's present their ratio in each latest year as less than 1. For instance, it means that the existing cash is insufficient to pay the short-term debt.
For the profitability ratio, it describes the company ability in generate income. In this ratio, it assists the internal and external user in making the decision. We analyze this ratio based on the 2 components, where are return on equity and the gross profit margin. In this return on equity, it shows the increases from 2019 to 2020. Meanwhile, for the gross profit margin, it shows the decline from the amount 2019 to 2020, where it reflects that 7-Eleven operate their business as well to generate their income.
I'm back. Okay, now we move to discussion on market value ratios. As for our company, 7-Eleven, we do a comparison on both 2019 and also 2020. For 2020, it shows a decrease of book value per share, which is from RM1.12 to RM1.10. Next, for dividend yield, it shows a decrease for 2019 to 2020, which is from 161% to 118%. Moreover, it still shows a decrease ratio for earnings per share for 2020 compared to 2019, which is from 4 cents to 3 cents. In addition, for market value per share, the company keeps showing a decrease of ratio for 2020. The ratio is RM1.43 for 2019, while for 2020 is RM1.34. Lastly, the ratio for price per earnings ratio For 2019 is 1.19 times, while for 2020 is only 1.13 times. Lower ratios might be cause of poor current and future performance indicators. That's all from me. Thank you.
I will talk about the efficiency ratios which determine the efficiency of the organization or management in utilizing their assets for generating cash and revenue by doing careful analysis of the inventories, fixed assets, and account receivables. Firstly, inventory turnover indicates the number of times a company inventories are sold and replaced during the year. The more times required for inventory to being sold or replaced show the faster movement of inventories. From our analysis in 2019, 7-Eleven required 7 times to replace the inventories, which need only around 51 days. However, in 2020, the ratios declined into 6.9 times. Secondly, total asset turnover. This ratio indicates on how efficient the company in using their total asset to generate sales to gain profit. Total assets are the combination of current asset and non-current asset. From our analysis, the total asset turnover for 2019 is 1.66, higher than in 2020 with only 1.256. Last but not least, for account receivable turnover, the hypothesis is that lower ratio indicates the higher account receivable that show the difficulty for the company to collect debts. From the analysis, 7-Eleven generate high ratio in 2020 with 33.45 times rather than previous year with only 24.56 times. This shows that 7-Eleven increased their ability in collecting money from debtors. The decline in the ratios shows the company take an aggressive action to collect money, so it has lower receivable ratio.
In conclusion, we will see the financial performance of the 7-Eleven company has been declining lately. This is because of the COVID-19 pandemic that's become worse in Malaysia. However, 7-Eleven managers have established a new framework to increase their revenue in 2020 and increase their profitability for the year. In addition, its production manager stated that in the ongoing national COVID-19 immunization program, 7-Eleven expects business conditions to gradually recover. Finally, even though the performance of 7-Eleven has declined, but its manager and directors will implement various measures to improve its market position and revenue while paying attention to customer needs. Thank you.